Hello everyone, this is Gilbert Gelada. I'm talking to you here from Private Corporate Counsel, downtown Orlando. This is Tufts on Tax, where all your tax issues and questions are answered right here with Mr. T. Scott Tufts. You can call him at 877-647-7887. Again, that number is 877-647-7887, or you can email him at stufts@pcc.law, or you can visit the website at privatecorporatecounsel.com. Hello, Scott. How are you?
Hey, good to be with you.
Good to be with you too. Now, today we're covering a different topic. It's about a case going on. First, poorly taxed crypto indictment signals more on tap. What is that all about?
All right, so we've talked about crypto. So the theory of crypto has been a little bit like it's its own highway and that nobody really is watching that. But what we have heard last year were reports that the IRS was going to intensify its efforts to try and combat what they perceived to be crypto tax crimes. What that would be is nothing more than the idea that if you're inside crypto and they treat it like property. So if you have gains that are occurring, meaning you went from one account to another, that would be no different than selling stocks and having gains. And so the idea is that folks are not doing that only when you exit the highway are they worrying about reporting it or whatnot. So the IRS has been indicating they were going to do it. Well, now we have an indication out of a federal grand jury in Texas, I think, where we've got a report that's been breaking. This is off of the Office of Public Affairs, Department of Justice website. Press release, Texas man charged with filing tax returns that falsely reported his cryptocurrency gains. So to understand what happened, this is very informative. And so I'll get into the story a little bit about it. All right?
Yeah.
So what happened here is, and again, these are allegations. This is not final. This is what a press release is meant to do to educate the public on what the government is concerned about. This came out of a federal grand jury in which they indicted a man in Texas for filing false tax returns and structuring cash deposits to avoid currency transaction reporting. That's where you have 10,000, per transaction, and you purposely bring your cash below that to try and avoid the reporting. Wow. People don't realize that if you're doing that, then that also is reporting because you're trying to bypass those reporting requirements. But according to the indictment, between 2017 and 19, this particular man allegedly filed false tax returns that underreported or did not report $4 million worth of Bitcoin in which he had substantial gains. All taxpayers are required to report any sales proceeds and gains or losses from sale of crypto, such as Bitcoin, on a tax return. That's like what I was saying. So in 2017, this man was allegedly used the proceeds from a sale of approximately $3.7 million worth of Bitcoin to purchase a residence. So think about what's happened. He's got a lot of crypto. He's got tremendous wealth, buys a home, uses the Bitcoin to do it, liquidates some Bitcoin to do it. Now the question becomes, what's the tax consequence of liquidating that Bitcoin and pulling your money off the cryptocurrency highway and buying a house? Well, if you think about it, you're buying a house, let's say it's 3.7 million, and you're something close to that. The government can look at the house and say, how did you afford the house? And if you paid cash for it, where'd you get the cash from? And so that's kind of what the theory might be. And allegedly, what he did was on his 2017 return, he is alleged to have inflated the price he originally paid for the Bitcoin. So in other words, when you sell the Bitcoin, right, to then be able to get your cash out, to then buy the residence, your gain, if you're thinking this through, Gilbert, is if you're pulling out $3.7 million worth of crypto to be able to buy the house you want. That's not the gain. The gain would be, well, what did you pay for the Bitcoin originally? you go in and buy Bitcoin, right? What's your basis? So the theory is that you should pay gain on comparing what did you invest in Bitcoin and then what did you take out in Bitcoin, in cash, right? Make sense? Yeah. So the issue there is what he actually reported versus what he actually had done. And and then you get into, I guess he had subsequent sales of Bitcoin on his 18 and 19 return as well, and they challenged that. So the bottom line is, and then I guess he also, after selling some of the Bitcoin in exchange for cash, the government's alleging that he made a series of bank deposits in amounts less than $10,000 to try and avoid triggering currency transaction reporting requirements. The press release says he faces a maximum penalty of 5 years in prison for each structuring count and 3 years in prison for each false return count. Let's kind of go back to the basic thing that our young people will be, I say young people, but, I'm sure people of all walks of life are doing the cryptocurrency. So I don't want to make a judgment there. But the idea being that as we talk to the folks at UCF, the young folks, they're very familiar with Bitcoin and these the ability to invest in it, put and hold money in that kind of digital format. And so what all we want folks to realize is that when you go in and buy this digital asset or digital concepts or Bitcoin or whatever it might be, we're still back to a basic tax concept, which is the government's going to treat that as property. And once you have property, it's like buying a real estate. If you buy it for $10,000 and you turn around and sell it for $100,000, right? Then you're going to have a gain equal to the $100,000 minus the $10,000. See? So now there's more complication to it, like if you improve the property or whatever, or depreciate the property or whatever. But the idea with Bitcoin is, at the end of the day, this shows that the government is on top of these things. So for anyone out there that had said, they're not really looking at it, they're not going to come after you, this just shows that they are. And so, and again, these are just allegations. So there's, a presumption of innocence in the country, of course, and for any alleged, the allegations here. But the press release went out to put people on notice that they are looking at this. They are cracking down on this. And so this is what the government does. They have a deterrent value of when they decide to go after folks because they want to set, they want to say that this is serious. And so this is good for us to know, right? For our audience. With Bitcoin and the number of accounts between it, that I suspect that the account-to-account exchanges are not being picked up. And therefore, the government's not getting taxes as they arise from what we call realized gains inside crypto. And I think that the government at some point has to go charging in and jump onto the cryptocurrency highway, so to speak. They got to go out and ticket people. They got to go out and do that. And they got to, in the proverbial crypto highway, they got to get on there and then they got to kind of do it. And then that gets everybody's attention, right? So it's like speeding on the highway. If the police get out there and look to give some tickets, people might slow down a little, Yeah. And so it's the same type of thing. If you imagine you tell people, well, nobody's really out there, imagine the speeds go up, right? Right? If you hear, there's no policeman to be seen anywhere, or police, person, anywhere, you might get caught because, right? So I think it's a little bit like that folks are not deterred because they don't sense that it's being enforced. Or in the case of crypto, they might not even realize that you can tax it. Because from our comments that we got from UCF folks, I think one of the persons we spoke to didn't even know that you could tax crypto inside the highway, So I think the analogy works well, that the government has the right to look for realized gains, whether you call them hard forks or whatever. If you liquidate from one account to another and you can capture what your basis was, then I think for all of our audience, we know that they need to stay on top of their purchased, what they purchased their digital, asset or crypto for, and then be ready to capture those gains if they need to. Yep. So I think they're going to continue to crack down on this, and it's going to get tougher for folks because I think there's a sense that the cryptocurrency highway provides a place almost like a mutual fund, or, well, I don't even know if that's the right example, but basically where you can have trading occurring without it being taxable. And I think this is going to slowly get out that not so fast, that it's a lot more involved. And it's like that for all taxes, as we've told our audience. If you catch yourself making a kind of simplification of the tax law, you might want to look more closely at it and decide. And each on the front line, the accountants that are doing the returns with people, it's probably part there where there's education there. I think these press releases and letting folks know, but I think there's also the awareness that comes from reports, shared amongst media, social media, and different things. So I think it's going to happen. It's just don't want to get on the wrong side of it.
You heard him, folks. You don't want to get on the wrong side of it. You can call Mr. T. Scott Tufts at 877-647-7887. Again, that number is 877-647-7887. Or you can email him at stufts@pcc.law. That's stufts@pcc.law. Or you can visit the website at privatecorporatecounsel.com. Thank you and have a wonderful day.